How to find support and resistance when day trading. I'm sure this is a question many beginner traders are asking, because every time I asked my ex for support, all I got was resistance. In this video, I'll show you guys how to draw out the correct support and resistance levels step by step when day trading. Finding the right support and resistance levels is crucial and should be a part of the foundation for technical analysis, whether you are day trading stocks, crypto, futures, or even forex. As a full-time day trader, I'll also be sharing some tips for utilizing these technical levels when trading short-term volatility. So if that sounds helpful to you, make sure to gently tap the like button and you will magically get more support from me without the resistance and bad jokes. So what exactly are support and resistance? Okay, no more jokes this time around, I promise. I don't want to torture you again. Support levels are areas in the charts, historically speaking, when the price sold off to those same price levels, the stock bounced off and people came in to buy the stock. So that's why on the chart, you'll see the stock typically would have bounced off a similar area like here, here, and here many times in the past before, because there's a market to support the stock whenever it's sold off to those price levels. Remember, a market, whether we're talking about the stock market, crypto market, futures, or forex, is made up of buyers and sellers. So a support area is where more buyers came in to buy than sellers. On the other hand, resistance levels like these are price levels where sellers came in to sell the stock. So whenever the stock came up to these areas right here, here, and all the way up here, sellers decided to take profit and get out of their position. And there were more sellers than buyers. Okay, so now that we all have a basic understanding of what support and resistance means, let's go in and draw the actual price levels step by step now. Step number 1, when drawing support and resistance, you are looking for the extreme highs and the extreme lows. So on the chart over here, where do you see the extreme highs and the extreme lows that we talked about? Right? The very obvious extreme highs all the way up here. All-time highs around $159. You have another extreme high around the same area, 155. And you have another extreme levels up here, right? Here. We are seeing like these upside down V shapes or W shapes when you are looking on the chart. So you can see this is the tip of the V shape, and then you have another tip right here. So those are the extreme highs. And down here, you see some of the previous levels as well. Extreme highs here, and all the way up here. So these are what we call resistance areas up here. You are looking for the most obvious levels, the highest levels that stand out. And this will work the same way when you are drawing support lines. You're looking for the extreme lows. So you can see here, you can see like a V shape here on the chart. This is a support area right here, right? The inside, the extreme lows of the V shape. Another one down here, because you see in the V right here, and then V shapes or W shapes, all these areas are support areas because that's the extreme lows. Before the stock, you can see bounced off once, twice, couple more times, and went up to the resistance areas that we drew out. So up here around the 143, 145 area, you have another support area because you have a small V shape down here, right? You can see this will be another extreme low. So that's another support area for the stock. The reason we want to use the extreme highs and extreme lows, the V shapes and W shapes, is because we want to find the most obvious level that the market and the majority of the people see and use. We're not trying to find some secret hidden line on a daily chart. It's the opposite, right? We want to use what the big funds, the big picture, big buyers and sellers use, and use those levels when drawing support and resistance. Okay, so now that we have the lines based on the extreme highs and extreme lows, the next step for us, step number 2, is to make sure that these lines have touched a few candles at least 2 or 3 times in the past before. Generally speaking, the more times a support or resistance line has been tested in the past before, the more powerful it would be. And that would be the same case for resistance levels. You can see now that we're trading near all-time highs, there's a resistance level around the 156 area. That's been tested once, twice, 3 times over here. So that's a pretty strong resistance and we are still holding up. Down here as well, you can see a resistance level around this extreme high right here, right? Around the 122, 123s area. That's been tested once over here, second time again, and the third time. That's when it succeeded and broke out above that resistance. So while you're on step number 2, you can go in and adjust all the lines you've drawn from step number 1. So I can come in here and move the lines around to make sure that they have indeed touched the candles at least 2 or 3 times in the past. The more touches or more contacts you get from the candles, that will be even better. Remember, that will mean the levels are stronger, like we talked about earlier. And that's really the essence of support and resistance levels. These are not some magical price levels that the candles just bounced off or sold off for no reason. These lines, the technical levels, they represent significant price areas that people decide to come in to buy or sell. So that's the reason we want to make sure to chart that out when we are day trading. Now moving on to step number 3. And this is more of a very important tip I have for the beginner new traders. When you are drawing support or resistance levels, you want to make sure that you're zooming out to the daily chart or the weekly chart. I know this may sound counterintuitive or doesn't make sense since we are day traders. Sometimes we close out the trades in 5 minutes or 30 minutes. But it's actually very important for us to see the bigger picture. A lot of times I see many new traders focus on just the intraday time frames, such as the 1 minute, 2 minutes, or even the 5-minute chart. But you need to take into consideration all the support and resistance levels from the hourly chart, daily chart, and if you are swing trading, you want to look at the weekly chart. So remember always to zoom out and use the big picture when you are drawing support and resistance. Now let's move on to step number 4. And this is another very important tip for the beginner new traders. Is to treat these supports and resistance lines as a general zone of buying and selling. It's important for you to understand that the support or resistance levels you draw out, or anyone else draw out for that matter, it's never going to touch exact to the cent. Generally speaking, the higher price and the more volatile the stock, the bigger the trading range would be. And this is especially true for low float stocks. For example, you can see this support area for AMD. This one's at 102, but down here is around $100. So for AMD, sometimes the support could be off by $1 or $2, and that would be normal for the stock. However, if we look at a completely different stock here, Tesla, this one is a lot more expensive than AMD, about 3 times more, and the range for the support and resistance would be very, very different as well. It's a lot higher. So on the chart, you can see the support area here, I would say, let's say $1,000. There's a range between $1,019 and down here, $987. So that's more than 20-30 points range for this rough support area on the daily chart. And it's the same up here. You can see this is a rough area of support for a Tesla stock. And the low of this day was around 1,158, and down here, the previous day, 1,146. So that's the difference of 10 points, but it's still in the same area of support. Same thing down here for resistance. Up here, the resistance was around 1,104, and over here, right, same area of resistance. This one is 1,116. So that's where you get a range of at least 10 to 20 points for Tesla stock. Again, always draw out the support and resistance on the higher time frames, the daily chart, the weekly chart, or the hourly chart, and draw out the most obvious levels, the extreme highs and the extreme lows. And don't forget that these levels should have touched 3 candles or more in the past before. This method of charting out support and resistance makes the chart very clean and easy to read when day trading. And that's all I need to day trade every single day. Just simple support and resistance, alongside with sometimes VWAP and volume. So I don't need to rely on any fancy or gazillion indicators. If you found this video helpful, please remember to drop a like at the bottom of the video. I would really appreciate your support. And feel free to check out my Day Trading for Beginners playlist down below. If you're interested in learning more of my day trading strategies without relying on indicators or patterns, feel free to check out the Humble Trader Academy on my website. Thank you guys so much for watching as always. I'm the Humble Trader, and I will see you guys next time. Thank you guys so much for watching. If you want to learn more day trading content, make sure to subscribe and check out my website at humbletrader.com.